Now let us go ahead and take on an example to understand para 38 and 39 of IND AS 28 on accounting for investment in associates and joint ventures. Okay. Now let us go ahead and take on this example. Yes, ma'am.
Investor Limited has equity investment in associate for rupees 1 lakh and long-term loan to associate LTI rupees 50,000 forms part of net investment, no planned settlement.
Right.
Therefore, the total net investment is 1,50,000.
So basically, let us say I am your associate company. Now you have invested rupees 1 lakh in my equity shares. Also, you have given a loan to me. How much? 50,000 rupees. And there is no planned settlement. That means this loan will not be repaid by the associate company to you, right? Therefore, this 50,000 also will be taken as an investment in an associate. So, what is the total investment? 1,50,000. Next.
The ownership is 40%.
So, basically, rupees, you are holding rupees, that is, you invested rupees 1 lakh in my equity shares, right? You bought 40% of the equity shares in my company. Got it? Next.
Year 1, losses. Associate reports a loss of 4 lakh.
I report a loss of 4 lakh. What is 4 lakh rupees into 40%?
1,60,000.
It is 1,60,000 is your share of loss. The investor share of loss is rupees 1,60,000. But how much you have investment associate? Invested rupees 1 lakh in my equity shares. And also you have given how much loan to me? 50,000, right? Yes, ma'am. Read further.
Step 1, reduce equity investment first. Therefore, the loss absorbed will be 1 lakh. Share of loss P&L debit 1 lakh to investment in associate 1 lakh.
The total loss is 1,60,000. What is that? Is your share 40% of 4 lakh, right? But you cannot, reduce all the 1,60,000 from your investment in equity shares in my company because what is the investment only? 1 lakh. Therefore, you reduce it to 0. What is the entry? You debit a share of loss. How much? 1 lakh. To investment in associate, how much? 1 lakh. So, you still have how much? Rupees 60,000 loss. Next.
Step 2, then reduce long-term interest. So, remaining loss is 60,000 rupees. Adjust LTI 50,000.
So what you do, debit the long-term interest. In this case, a loan. And then it will not be anyway repaid by the associate, right? It is as good as an investment associate. So reduce the loan amount. So how much out of 60,000 balance? Totally 1,60,000 of that 1 lakh against investment. And the balance 60,000 of that 50,000 against long-term interest. What is the entry?
Share of loss P&L debit 50,000 to long-term loan 50,000.
That's it. You still have how much? You still have rupees 10,000 loss. That cannot be. That will not be recognized in your books unless you have an obligation to pay that amount to the associate company, right?
Yes.
So here, read further.
So step 3, remaining loss 10,000 not recognized unless obligation exists.
But if there is an obligation for you, the entry would have been debit share of loss, P&L to liability, right? But here no obligation exists, nothing is given, no guarantee given by your company. Therefore, the 10,000 loss will not be recognized in your books. Is that fine? Next.
Year 2 profits. Associate reports a profit of 2 lakh.
I report a profit of rupees 2 lakh. What is 2 lakh into 40% your share?
80,000.
So you cannot recognize all the 80,000 profit in your books because the reverse order. Remember, what is a loss not recognized? 10,000 rupees. So we reduce that first. That means out of 80,000 your share of profit, 10,000 cannot be shown in your books because you never recognize a loss of 10,000, right? So first adjust the unrecognized loss. How much? 10,000 gone. What is the balance left? Only 70,000 profit can be recognized in your books. But when you recognize a 70,000 profit, what you should do? First, you have to increase the loan amount, what is written off, right? And any balance or profits will be debited to your investment and associate. Is that fine?
Yes.
Yes, ma. 70,000 loss, or
Yeah.
profit rather.
70,000 remaining profit, then restore the long-term investment.
That means first restore the long-term
Investment 50,000, long-term loan account debit to share of profit P&L 50,000.
Exactly. You think this way, in case the company goes into liquidation, now associate goes like first whom we paid, the loan will be repaid first, right? So therefore restore the loan amount. So a debit long-term interest or loan account debit how much? 50,000 to share of profits P&L 50,000. So you still have 20,000, right? Profit, your share. So what is the entry? Restore the investment. So debit investment in associate how much?
20,000 to share of profit P&L 20,000.
That is what. So basically this sum is testing your knowledge on para 38 and 39. And I will be discussing a similar example which is there in your study mat. There is one illustration. I'll work out that example where there are three investments. Investment in equity, and then long-term interest hyphen preference shares, and also long-term interest hyphen loan. Is that fine?
Yes.
That's it.